Dan, this is looking today like what you've been predicting for a while, a series of bear market rallies that fade. What are the characteristics here that you're looking at, maybe particularly in tech, to see if your thesis is holding up?
Well, I think Nike this morning is a good harbinger of what you can expect during earnings season. And so I was looking at it closely. And if you look at the forward numbers, they got cut. And we had a tweet on it this morning. And none of the things that they talked about were unknown. They talked about foreign exchange. We all know the dollar is up a lot. Microsoft actually pre-announced negatively off of that 6 weeks after they gave guidance. They talked about China being an issue on the demand side. So again, not a huge surprise there. We know the cities are being locked down. And they talked about supply chain costs and freight costs. Again, no surprise there. What's interesting is this morning, the stock was obviously up 3% pretty early, and now it's down about 6%. And so you've seen this sell-off, even though everything that they talked about you kind of knew ahead of time. Stock's already down over 30% for the year, and it's still getting hit, and it's at near a new 52-week low. So I think that's gives you an idea of this whole mindset of, oh, the bad news is fully discounted, and they're down so much, and you just got to buy them because they're going to go up. That worked over 13 years when you had a Fed that was backstopping every move lower in the market. The Fed is now dealing with inflation. They're not going to backstop this. In fact, this is kind of what they want, which is demand slowing down to try to cool off inflation a little bit. So the Fed is your enemy for the first time.
Dan, what about the Snowflake upgrade today? Brenthill upgraded it, and it's still down 3%. Does that fall in that same bucket of, shrugging off good news potentially and selling things off, and that telling you something about this market?
Absolutely, because Snowflake at the end of the day is still incredibly highly valued. And I think the mistake a lot of people are making is going, well, business sounds good today. And that's true. But you have to remember, you've heard about a lot of companies going ahead and either not hiring or starting to lay off people in the tech industry, where just a couple of months ago it was about, oh, we can't get enough people to fill all these jobs that we have. And so if you are now starting to reduce your workforce or stop your workforce from growing, you're not going to need as many seats from a Snowflake or other software companies. So that will show up later in the year, where the impact you're seeing today is more driven by consumer demand slowing down. What you should see later during the year is the business demand slowing down, because those companies that serve the consumer are now seeing slowdowns themselves.